the real magic of the story is the baseline is Bitcoin is raw commodity. You either buy that on Coinbase, or Bitcoin is wrapped. You buy IBIT from BlackRock. That's the baseline. But it turns out most of the world doesn't want that. I mean, a lot of the world wants.
In a recent interview on Risk Reversal Media, Michael Saylor shares his bold vision for Bitcoin as a global reserve asset, the shift in institutional adoption, and how AI might impact Bitcoin's future. At the time of the discussion, Bitcoin is trading at $95,000, down 3% in the last 24 hours and 30 days. Don't forget to like, subscribe, and share. Now let's dive into Michael Saylor's insights.
Yeah, I think the end game is to securitize the entire asset class, securitize the asset class. And so when we say we're a treasury company, what we mean is we're the institutional bridge between a high energy, volatile crypto commodity, that thing we call Bitcoin, with 60 AR, 60 volatility. What that means is it's always going to be higher performance than the S&P index. It's always going to be more volatile than the S&P index. As it goes from $1 trillion to 250 trillion, as it merges, the S&P will adopt Bitcoin and their performance will drift toward it, and Bitcoin's performance will drift toward the S&P. But as long as we're sitting between conventional equity capital and this crypto capital, we can arbitrage the difference. And as long as we're sitting between probably 60 ARR, 60 vol, and the bond market is 6 ARR, 6 vol, 5.5. So you have fixed income, which is 5.5. You have equity, which is 15.15 in the traditional market. You have this raw energy source, which is 60.60 in the crypto economy, which is 24/7, 365. No one can stop it. Chinese, Russians, Africans, South Americans, people can panic sell 10 billion of it on Saturday night through one of the 14,000th exchange in the world, or 1,400. So you've got this raw thing, and then you've got this traditional market. And what we've said to our investors, and I think they're starting to understand now, is so we're going to strip the volatility, strip the performance, strip the risk off of the bottom of the capital structure, give you like a 6 to 12% investment grade instrument to invest in, a 12 to 24% high yield instrument to invest in, a convertible investment that gives you 75% of the upside to 100% of the upside, but 10% of the downside. And then when we strip those performances and those vols via those fixed income instruments, you're talking like, say you raise 100 billion in capital. Well, you're grabbing 60 to 65% of the economic boost for the equity, for the MSTR equity. So when I sell 100 billion of fixed income, I'm going to tax $60 billion of boost onto 40 billion of equity on the MSTR side. That's how we get to 2x Bitcoin or 2.5 or 3. High voltage, they want 10x leverage. Susquehanna wants 10x leverage. Millennium, Soros, they want to be up there in the stratosphere. And then some people want, the MSTX, MSTU, those two ETFs raised $4 billion in a matter of weeks, no marketing. They want 4x, 3x Bitcoin. MicroStrategy is 1.5 to 2x Bitcoin. So some people want to be up there above the baseline. Look, if you believe in Bitcoin and someone can give you 2x Bitcoin and they can do it with intelligent leverage or with a balance sheet you trust, why wouldn't you want 2 times whatever you wanted, right? And then there's another world of crypto curious people. They're just tired and bored. How do you feel about a portfolio of 187 diversified preferred stocks that give you 520 basis points? And it's like, okay, you own the 16th tranche of the 18,000th regional bank, and it's like QSIP 199742. There's no volatility. You can't pledge it as collateral. You can't borrow against it. So there's a world, $300 trillion of bored money that's waiting to die, getting 2-3%. And then there's another 200 trillion of hot money. MicroStrategy is just going to sell all of those instruments up and down the chain while we ignore the baseline. And I'll just make this one point. Like when you're arbitraging this, you're asking the question, well, how fast is it appreciating? So Bitcoin is plus 60. And let's just say because it's plus 30 to 60 versus the US dollar. And my long-term forecast is 29% for 21 years. So we're plus 30 to 60. Then the next question is how volatile is it versus the dollar? Bitcoin's 60 volatile, but you can imagine it's going to be plus 30 to 60 more volatile. Then you ask the question, how fast is the investment cycle? If I borrow a billion or raise $1 billion of equity and I invest it in a real estate project, it takes 5 years, 1,500 days. If I invest it in Bitcoin, it takes 1 day. I'm running the investment cycle 1,000 times faster.
As Michael Saylor highlighted Bitcoin's future in global finance, let's hear him explain how institutions are reshaping the Bitcoin market, the potential of Bitcoin ETFs, and why comparing Bitcoin to gold may be outdated.
Look, Bitcoin's going to go to 10x gold easy. Just keep in mind, right? A public company, it's got to hold a commodity on its balance sheet because it can't hold securities. So you've either got a choice of a digital commodity called Bitcoin, which is 60% ARR. Gold is 7%. Real estate is 10%. Bonds are 4%. And everything less than 15% doesn't beat the cost of capital. So the S&P sets the hurdle. So gold fails as a treasury asset for everybody in the world. Bitcoin succeeds. I think you could, if you call Bitcoin digital gold, it's 10x gold. But I still think it undersells Bitcoin, right? Because Bitcoin is digital capital. It's not just replacing gold. It's going to replace real estate, the S&P index, and any capital asset held by an institution or a wealthy family. So right now, wealthy families and investors don't use bonds or gold as a capital asset. They would use the S&P index or stocks as a capital asset. But banks and regulated corporations, operating companies, aren't allowed to use securities as a capital asset. They're knocked down. They don't want to use gold. It's not liquid enough and fungible. It's not liquid enough. And so they use real estate, and you got a REIT or a real estate development company, but real estate is, less than the S&P index and not volatile. If you give up the ARR and the volatility of the S&P, you're trading down. So that's not really a winner. And then you're stuck with bonds, and bonds are dead money, a liability. So yeah, I think I've said before, Bitcoin, it should reasonably become a multi-$100 trillion asset class, right? My forecast is 13 million a coin by 2045, base case, upside and downside. I just expect another way to say it is, it's 60% ARR at 60 vol. It's going to track toward 20% ARR and 20 vol when S&P is 15 over 20 years. It'll just step down as it approaches that. So we do that. We get to the 500 million. Bitcoin rallies, the stock doubles, the stock triples. Now we just have an opportunistic run. We discover the convertible bond market, and they want to give us 650 million in cash pretty much for free. If I came to you and said, I'll give you $650 million, it's 75 basis points, go invest in something. Can you come up with an idea for something to invest in that yields more than 1%? Probably. If you can't, right, you're not in business, right? Probably you can't. So we did that, and Bitcoin rallied again, and all of a sudden we were able to raise $1 billion for zero. Okay. And then we realized, well, we might as well take another 500 million, and we took a $500 million loan at 6%, and we thought, well, Bitcoin's going up 60, we'll borrow at 6, we'll loan at 60, we'll capture 54. And it moved around, and then at some point, some banker called me and said, you can do this ATM where you can actually sell equity in the market. I said, you're kidding me, really? That's possible? And actually, the greatest innovation of the past 30 years, guys, in the capital markets is the ATM shelf registration of equity, because it allows an issuer to sell shares pari passu to an investor. You're basically on the same footing as anybody else. It's a fair thing. And for my entire career, if we wanted to sell $100 million of equity, our stock would get hammered down 20%. And so it felt pretty good to not get hammered 20% and be able to sell into the market whenever you want. And so now we hit upon this new stage where we realize we have a commodity that returns more than the S&P index that we can buy by selling our stock. So if you're an investor and I give you a return higher than the S&P, how much capital are you going to give me? Infinite. So we started doing that. We sold $1 billion of that. And the short of it is we went from a $500 million investment to $10 billion of capital raised, and the stock, went up by a factor of 10 or 20. And then we got to 2024, and 2024 was by the way, I skipped the crypto winter where everything crashes from 66,000 to 16,000, but this is a half-hour podcast. So I'll just say it was a roller coaster. We went up to 66, down to 40, up to 66, down to 16, back. But, and that's all very colorful. But the real point is we're buying Bitcoin with equity, with debt. We're refinancing the debt. We're at all points, generally, we're doing it in an accretive way. And we get to 2024, and then we discovered the value of volatility. I mean, really understand it. Because in January of 2024, Bitcoin isn't an asset class, and the second week, the SEC approves those ETFs. And then you start having the snide comments like, well, now we don't need MicroStrategy anymore. They're like just a proxy. They're like a clumsy ETF substitute. We'll just put our money into the ETFs. But what happened at the same time was the halving was coming, and all of the investors, the vol traders, went through a secular rotation, and they started selling the Bitcoin mining stocks and looking for something else to trade. So if you track the liquidity in the options market and in the equity market, there was a major shift in Q1 and early Q2 where a lot of the volatility in the options traders and equity traders, they basically hopped off a dozen Bitcoin mining companies onto MicroStrategy because the Bitcoin miners were going to the halving where their revenues get cut in half. So when that happened, our options interest exploded and we became the #1 options market. If you have trust and people understand you, they'll give you your money. So what happened next is we raised $13.5 billion in 4 weeks. And if you look at my tweet, my tweet this morning is basically, we generated about a $9 billion plus gain for our shareholders in those 4 weeks. We're making hundreds of millions of dollars a day. It's tricky for conventional investors to understand it because you're not capturing shareholder value creation via GAAP accounting because for 2 reasons. 1, Bitcoin's indefinite intangible, but 2, in the history of 50 years of the capital markets, everybody's been on the US dollar standard, which is 0 vol, 0 ARR against the dollar. And this is the Bitcoin standard, 60 vol, 60 ARR against the dollar. We don't have the math, the accounting to keep up with that in the traditional system. And that's why we have to put forward things like a BTC yield, a BTC spread, a BTC gain. And those that understand BTC, they get it and they're long and they love it. And those that don't understand BTC or don't understand this or just aren't really interested in putting in the work, they just think it's sham crazy and they're just going to short it or they're just going to whatever. So that's where we are today, is from desperation to opportunistic to strategic to identity. At this point, we're a Bitcoin treasury company. I'm on a mission. My mission is I'd like to see the entire world recapitalize on Bitcoin. Every company, every family, every individual, every government. I think it's an economic protocol for prosperity. I think it's as important as English or fire or electricity or steel. I just think it's good technology. It's a good idea. we're reaching the fun stage. The next 4 years, I think, are kind of fun. We get to do a lot of interesting things to help people.
To watch the full interview, check the link in the description. We'd love to hear your thoughts. Do you think Bitcoin will replace gold as the top store of value? How do you feel about AI accelerating Bitcoin adoption? If you enjoyed this discussion, please subscribe, like, and share for more content on decentralized technologies.